Hi, thanks for chiming in today. So we're going to discuss the double taxation in sales tax audits, especially as it pertains to the construction industry. So assume you're undergoing a sales tax audit, and during that audit, you're going to have an invoice, and your client is making payments on that invoice. So let's assume it's a $10,000 invoice, and your client is paying $5,000 at a time. So that's just going to be two payments. But let's assume the auditor looks at that and says, look, you had an invoice for $10,000 and it was paid on twice. So that's a very common problem that we get in our sales tax audits. Essentially, it's just double taxation. If you have 4 payments made on the same invoice, it could be 4 times the tax as well. Or let's assume you have a change order and it goes from a $10,000 invoice to a $15,000 invoice. There have been many times where the sales tax auditor has counted the first $10,000 as a separate revenue from the $15,000, although it's just one transaction worth $15,000. So anytime you have a sales tax audit and you're in the construction industry, make sure that all of your change orders are clearly written out. Everything is spelled out and the differences are reflected on the invoice and canceling out the old invoice as well. And anytime you have partial payments made on an invoice, make sure that those dates are very clear so that when we undergo the sales tax audit, it's a lot easier to prove that this is not a different invoice than the original one. Thanks again. Take care.